Greetings. I'm Dr. Gloria Bashir, and on behalf of Takwa, Mashiach Takwa, I welcome you to today's Talim. We have a wonderful featured guest speaker from the Office of the State of Illinois Treasurer's Office. And but before I give her full introduction, let me first thank all of you for tuning in today. And on behalf of the Talim Committee, again, Dr. Aisha Elamin, our chairperson, and Dr. Lionel Allen, and myself, we welcome you. We thank you for tuning in. And I'm going to open with prayer. A'udhu minash shaitanir rajim, bismillahir rahmanir rahim, alhamdulillahi rabbil alamin, ar-Rahman ar-Rahim, maliki yawmiddin, iyyak na'budu wa iyyak nasta'in, ihdinas siratal mustaqim, siratal ladzina an'amta alayhim, ghayril maghdubi alayhim waladdallin. Amen. With the name of God, most gracious, most merciful, all praise be to God, the cherisher and sustainer of the world, most gracious, most merciful, master of the day of judgment. Thee do we worship, in thine aid we seek. Show us the straight way, the ways on those who have, the way of those who have gone astray. And we pray, Allah, that you continue to bless us to stay on a straight path. Amen. So I'd like to welcome the Director of Secure Choice, Ms. Christine Cheng. And she serves as the director, as I said, of Secure Choice for the Illinois State Treasurer's Office. And in her role, she oversees implementation and expansion of Illinois Secure Choice to improve retirement savings access for private sector workers, helping to ensure that more Illinoisans can retire with dignity. That's a big calling. Prior to joining the Illinois State Treasurer's Office, Christine spent 17 years working on improving financial health and benefits access for Illinoisans, including improvement in Illinois' largest free tax preparation program and a statewide coalition to help Illinoisans access their stimulus checks and the expanded child tax credit. Christine has a BA in Cognitive Science from Northwestern University, and we are so pleased that she's bringing her knowledge and her experience to share with us, and in particular, to be able to share this information for those individuals, our young adults, our millennials, and for older folks who may qualify for this program. So I bring you Ms. Christine Cheng. All right, take it away.
Dr. Bashir, thank you so much for this opportunity to speak and to share. So good afternoon, everyone. I hope everyone is having a wonderful day, enjoying this great weekend that we have finally arrived at after, we thought we bid winter goodbye a little while ago and then it was still here. So happy to be here with all of you. I will go ahead and start a screen share here, and I'm happy to share this presentation with you, Dr. Bashir, after this, and you can feel free to send it out.
Yes, thank you.
Okay. All right, so to get started, I just kind of want to set the scene. So basically what I'm going to go over today is an explanation of a particular state law here in Illinois that is relatively new, and that really is meant to try and improve retirement savings access for Illinoisans. So I'll talk a little bit more about why the state even decided to take action in this arena, a little bit more about what the actual state law is, and share with you, of course, what is the Illinois Secure Choice Retirement Savings Program. So I'll get started with background. So why did the General Assembly back in 2015 decide to take action in the space of retirement? And really what it has to do with our country, our state itself is facing a looming retirement crisis wherein too many people have too little saved for retirement. There are a lot of stats out there. The one that I'll share right now is that nearly half of working age families have nothing at all saved in their retirement accounts. And while AARP has shown that workers are 15 times more likely to save for retirement if they can do so at work through payroll deduction, we also know that 40% of our private sector businesses here in Illinois don't offer a workplace retirement savings program. And clearly, you know, the lack of retirement preparedness is a problem on really multiple levels for the individual worker. Of course, it's a very poor outcome when they reach the end of their working career, and really they don't have enough to survive on. Social Security is almost certainly not going to be enough. And there's the health of Social Security into the future is tenuous as well. And then kind of on a more macro level, it's a poor outcome for the state, fiscally speaking, because when retirees in more numbers are becoming more reliant on public assistance programs, Illinois taxpayers are then footing the bill. So the Pew Charitable Trusts has done a state-by-state analysis of this. I think they're soon to release this data, but they looked at Illinois in particular, and the cost to Illinois for not trying to address this retirement savings crisis just here locally is estimated to be about $8.8 billion over a 20-year period, in both increases in public assistance costs, but also decreases in household spending for those retirees who, again, have insufficient financial resources when they reach that part of their life. So there's a lot of reasons to need to do something. I'll also point to the fact that there's an equity issue here in terms of who is least likely to have a chance to save for retirement at work. That population is disproportionately workers with lower wages, workers at smaller businesses, workers of color, and female workers. So lots of reasons that we need to start doing something to help people have avenues to save for retirement. So in terms of what Illinois Secure Choice is, it was created as a program as part of a larger state law called the Illinois Secure Choice Savings Program Act. So General Assembly signed this into law, or the governor signed it into law in late 2014, early 2015. And the state law is really about provision of workplace retirement savings options for retirement. So the state law, and I'll talk about it in a little bit on the next slide about kind of who it applies to in terms of small businesses, but then also which employees are eligible. The overriding state law is really that businesses meeting certain criteria need to either offer their own qualified retirement plan or facilitate Illinois Secure Choice, which is a state-sponsored retirement program for private sector workers. So I'll talk a little bit about what the program is itself here. So the point of Illinois Secure Choice as just a program is to provide an easy way for Illinois workers to put aside a portion of their paycheck for retirement. So specifically, the vehicle that a participant in Illinois Secure Choice would get is an individual retirement account, or an IRA. And the way that they would be funding their own individual retirement account is through payroll deduction that's facilitated by their employer. So the program is meant to really capitalize on that mechanism of payroll deduction that AARP has found to be so powerful and so easy for workers to get into, and really kind of make that more widely available to businesses that have had really not as much access or ability to take on starting their own plan. This program itself is overseen by a 7-member public board, of which the state treasurer is chair, which is kind of how the state treasurer's office is involved. We help the board with actual program implementation. And I also want to point out that there's a third-party private sector financial services firm that administers the program in terms of record keeping, custody, client services, withdrawal requests, contribution inquiries, all of that, that's handled by a private sector partner that's actually a well-known leader in the space of government savings programs, namely 529 college savings programs, but they also serve some of these as the administrator for many of these state facilitated retirement programs. I want to touch on a few of the key features of Illinois Secure Choice. So as discussed earlier, it's really harnessing that mechanism of payroll deduction. So this is an automatic payroll deduction. IRA would be kind of the category that it is. This program is completely voluntary for the saver, the participant, the worker, and this is kind of how we use those terms kind of interchangeably. We do use automatic enrollment, which is a best practice that's taken from the 401k industry. If you've been following the legislation at the end of 2022, the Secure 2.0 includes a provision that all 401k plans started after the date that the law was signed will eventually have to have automatic enrollment as a feature. But what's important to remember is that the employee always has the choice and control over their participation. They can opt out if they would like to instead of being automatically enrolled, or they can, and there are some other options they can take in terms of just going with the defaults that are set in the program, or customizing their pathway in terms of maybe what rate they want to save at or what investment options they want. But we'll talk about that a little bit later. This program was deliberately meant to be simple in the sense of the automatic enrollment is already there, which helps with inertia. You might say to yourself, why did the state have to take action on this? Can't a worker always just choose to go out to the private marketplace and start up their own IRA? The answer is yes, absolutely. A worker can do that at any time. Are workers doing that? Not really. They're really relying on what's available at work in large part versus taking it upon themselves to go and find something. And it's complicated, right? We all know financial services can bring a lot of complexity in terms of who do I go to? What do I trust? There's so many options. Which one is a good fit for me? A lot of those things are barriers for people really starting to save for their future. And this program is meant to help try to eliminate some of that complexity and provide an easy pathway to saving for the future. The other thing I want to point out is that these accounts through Illinois Secure Choice are portable. As I mentioned, the vehicle here is an individual retirement account, which is to say the account always belongs to the worker. It's not tied to their employer. So we have plenty of workers who are, for instance, employed by multiple employers at the same time, or that move from one position to another one with a different employer. This account is always theirs. They can always take it with them. They can always choose to self-fund it if they move to an employer that isn't participating in the program. In terms of who this state law applies to, who's eligible to participate in the program itself, on the employee end, there really are just three main requirements. First, that the worker has wages that are allocable to Illinois. So phrased in a different way, they have to be paid Illinois wages. Where they live is really not the issue. We know we are bordering other states in various directions, and we have companies that have locations elsewhere, have workers coming in from elsewhere. The state of residence does not matter, just that that person is earning Illinois wages. The second is that the worker is age 18 or older, and the final requirement is that they have either a Social Security number or an individual taxpayer identification number, also known as an ITIN. On the employer side of things, in terms of which businesses are covered by the Illinois Secure Choice Savings Program Act, it's employers who meet these criteria. First, that they don't already sponsor an employer retirement plan like a 401k or a 403b. The second is that they have at least 5 Illinois employees. And the third is that they've been in business for at least 2 years. So again, the state law that I talked about before is really just saying that those employers who meet those criteria need to either facilitate Illinois Secure Choice or start sponsoring their own retirement plan. And again, the key thing here is we would like employers to do something in the way of offering something, a pathway for their employees to save at work, because we know that's going to be a powerful way for people to start building that savings for the future. Whether they want to choose to sponsor their own plan from the private market, like a 401k or a 403b, or they want to facilitate the state program, either way helps to increase access. I have a little bit more information down here below, but just basically the thing I want to say too is that any employer that's actually covered by the state law in any given year, they're going to be notified by our program directly through mail, and then also we'll supplement with email if we have valid email addresses. Our data source is the Illinois Department of Revenue. And then, there's a little bit more information there in terms of what employers need to do when they get their notice. It's really to either establish if they're going to go the private route, if they already have a plan or they're soon to start their own retirement plan, then they would report an exemption. If they were going to start facilitating Illinois Secure Choice, then it would be starting with the onboarding process there by registering online at our website, which is ilsecurechoice.com. I also want to talk a little bit about kind of how we've been onboarding employers over time. So our program was launched in 2018. We were the second state in the country to actually launch a program. Oregon was the first in 2017, and then we came along in 2018. Subsequently, there are now 7 states that have similarly structured programs in place. The way that we approach sort of employer onboarding is to onboard in waves based on employer size. So we started back in 2018 with the largest employers, those with 500 or more Illinois employees. And then through the years, and there was a pause for COVID in there, through the years, we've just been working our way down to the smaller and smaller businesses in the segment. So this year, 2023, we're really going to be focusing on businesses that had 5 to 15 Illinois employees in 2022. So we always use previous year data because that's what we can rely on in terms of what we get from Illinois Department of Revenue. That previous calendar year being 2022, that's the data that determines which employers are in our universe for this current year. So that's going to be our focus for 2023. There is going to be a registration deadline of November 1st of 2023. And then in terms of, I just wanted to speak to this, I sort of alluded to this earlier. We hear pretty consistently from small business owners in particular that there are a lot of reasons why they don't end up sponsoring their own plan. And really very consistently, these are the top 3 reasons we hear. They don't have the administrative capacity to handle the administrative burden. Second, they don't really have the margins to afford the fees. And third, they really have an inability to shoulder any fiduciary liability. And our board, in thinking about designing this program, really wanted to account for those hurdles in terms of thinking about how to structure Illinois Secure Choice as an alternative. So it's meant to be a very light administrative lift on the sort of capacity end of things. Number 2, there are no fees for the employer, and actually matching contributions are prohibited in the program. And finally, facilitating employers are not considered fiduciaries. All the fiduciary liability rests with the board and anybody that they name as a fiduciary, but it's never the employer. So I want to talk a little bit on the employer end of things about kind of what those responsibilities are if you're a small business owner facilitating Illinois Secure Choice. So down on the left side of the screen here, you see the key things that we need facilitating employers to do. So it's registering, it's setting up the account online. All of this is done through an online portal that our private sector partners set up. And then it's adding your employee roster. So letting us know who on your payroll is an eligible employee. And then if you have employees that want to stay in this program, want to save for retirement through this program, it's on you as the employer to just submit the payroll deductions and then submit the contributions to us. So it's not dissimilar from other types of withholdings that you would be doing for an employee like FICA or AFLAC or different things like that. In terms of what an employer does not do, again, the employers that are facilitating Illinois Secure Choice do not pay any fees, they don't have any fiduciary liability, and they do not make matching contributions. And then in terms of what's like really prohibited, employers, it is not on you to give financial advice, to encourage or discourage participation in the program. You're not touching any of the investments here. You're really just playing a very administrative role in kind of facilitating the movement of employee funds to their individual retirement accounts through the program. So just to kind of clarify kind of how this process works. So I mentioned that there are really 3 steps that an employer takes from the outset. Number 1, they register. Number 2, they add their roster of eligible employees. And then third, once the employees have had a decision period to kind of decide, do they want to stay in the program? Do they want to get out? Do they want to customize their options? Anybody who wants to participate in the program, it's, doing payroll deduction for those employees and then submitting their contributions. So to kind of get into a little more detail, once an employer uploads their roster of eligible employees, that's going to initiate the program reaching out directly to those employees to tell them what the program is, kind of introduce the different options that they have, and it kicks off a 30-day employee decision period, during which employees can do one of 3 things. First, they could choose to do nothing, go ahead and get automatically enrolled at the end of the 30 days, go with the default options, which I'll talk about in a minute here. Second, they could choose to customize those options. Maybe they want to change their savings rate, or they want to name some beneficiaries, or they want to change their default investment option to something else. Or third, they can choose to opt out. We understand certainly that this opportunity is not going to fit everybody's timing, objectives, financial means, situation at the moment. And so employees always have the ability to opt out. And then post that 30-day employee decision period ending, anybody who's in the program still then is automatically enrolled on the 31st day, and then payroll deductions will start with the next available pay period. So just to kind of go into more detail about the options that a saver will have, if they were to do nothing and just be auto-enrolled at the default options, That left panel there that you see is really describing that default scenario. So first thing, in terms of the type of IRA that we offer as a default, it's a Roth, which is to say it's funded with after-tax dollars. And there is a strong advantage to this type of setup, which is if an employee needs to withdraw their contributions, they're able to do so without tax penalty because they already paid tax on those dollars. This would be different than a pre-tax type of funding stream. The default contribution rate is 5% of gross pay, and the default investment option is for those funds to go into a 90-day holding vehicle to preserve the value of the capital, and then on the 91st day for those funds to be swept into a target date fund that would align to when the worker is expected to turn 65. So I'll talk a little bit more about target date funds a little bit later on, but again, that is the default setting for a saver. The second option a saver has in that 30-day employee decision period is to customize their settings. They may want to go with a different rate than 5%. They may want to go with a different investment option versus the default setting. They might want to add beneficiaries, those types of things. So those are all things they can do in that 30-day decision period. And then we have, again, workers who just this isn't the right time or the right opportunity. They would like to opt out. We offer multiple venues for doing that. I do think the fastest would be by phone because then you get confirmation right away, or you can do it online, or you can do it by paper form. So in terms of customization, again, you can kind of see these are some of the other details here. You know, in terms of the type of IRA, you can recharacterize contributions to be a traditional IRA. That would apply sometimes for folks that are on the higher end of the income bracket because they're not eligible to participate in a Roth, but most of our savers are going with the default Roth IRA type. The second thing is with contribution rate, you can set that rate from anywhere from 1% to 100%. The key thing being that you have to respect the IRS contribution limits, which for 2023 would be $6,500 for savers who are under the age of 50, $7,500 for savers 50 and older. And that, again, is just an annual limit set by the IRS. We do also have an auto escalation feature, which would say that for eligible savers, their savings contribution rate will be bumped up automatically by 1% at the start of each calendar year. That is a thing that a practice that we see often in the 401k space. It is something that a saver can choose to opt out of if they would not like that automatic increase, if they want to control what their rate is or when it moves up. But we have taken this as a best practice where that's been very successful in the 401k space to really increase people to their optimal savings position by doing this automatic 1% increase each calendar year. And then finally, in terms of the actual investment option, the board set on purpose a very limited menu of options that's meant to meet the risk tolerances of most savers, but also not be overwhelming, because we know that when you put too many choices out there, too much complexity, it can really hinder what people do or not do. And it's a problem in some cases that limits participation when there's too much choice. And so in addition to the target date funds, which is the default, we have a few other options that you see there that I'll talk about shortly. So this is a deeper look at the 4 investment options that are available. You have, again, this is meant to kind of address the broad preferences in terms of risk tolerance that investors may have, savers may have. So we have a capital preservation fund, right, that really focuses on safety and liquidity. We have our target date funds. So the target date funds have become very, very popular over time because the allocation of assets will automatically adjust as the saver gets closer and closer to their target retirement date. So whereas at the beginning of a savings journey, when you're farther from retirement, you can take on a little bit more risk, have your mix of investments be a little bit more heavy on the equity side. Over time, as you get closer to that target retirement date, you're going to want a little bit more safety. You're going to want a higher allocation to bonds, which give you that safety without as much sort of growth upside. But the allocation of these assets is being automatically adjusted without you having to do anything as you progress in that retirement journey. We also have a conservative fund, which is obviously what it sounds like, meant to be, sticking with the performance of the bond market. And then we also have a growth fund that more tracks to the S&P 500, so it's the 500 largest traded stocks. And then in terms of cost to the saver, right now, our fee structure is that the saver pays 75 basis points, in other words, about 75 cents for every $100 in the account. Also wanted to share with you a little bit of feedback that we've heard from our business owners who are facilitating the program. A lot of our employers have said that this is something that really met a need for them in terms of they've wanted to offer some sort of retirement option for their business, but just financially, they've not found it feasible or capacity-wise to start and sponsor their own plan. So this, they've said, has been just a nice way for them to be able to add something that really doesn't add to their bottom line because there are no fees to the employer. We found that especially in today's tight labor market, we're hearing employers saying that being able to mention this retirement savings thing that's just part of payroll has been something that they can add. And then there's a gentleman who called it kind of adding another arrow to the quiver of benefits that help differentiate his business from the other ones that are like him seeking the same talent. So we've definitely heard that more recently, especially because the labor market has been so tight. So, the other thing is that we find a lot of activation right now in industries that you traditionally don't have retirement at work. The restaurant industry is our #1 example. You hear it all the time. And if you come onto our website, ilsecurechoice.com, there's a video down below from, there's one that's like a beauty salon and another one that's a restaurant in downtown Chicago. You really hear the participants in the program, these workers saying, in this industry, like I never thought I'd be saving for retirement at work. That just traditionally doesn't happen in a hair salon. That traditionally doesn't happen in a restaurant. And I think it's really important that what we're doing is helping to level the playing field in terms of access. There's a gentleman from the salon who says, oh, I thought this type of retirement thing was for people who are more affluent. I didn't think it was for people like me. And to me, this is about equity. This is about saying that everybody has an equal chance to build their security for the future. There shouldn't be a reason why the industry you're in, your level of pay, what you do day to day should limit you from having access to this kind of a channel. The last thing that I want to share here is just a resources slide in terms of where you can get more information. Obviously, our website is kind of a big repository of different bits of information about how the program works. We have FAQs on there, both for our audience of employers who are covered by this state law, but then also employees who might be in this program. I will also point out that we do have a self-enrollment option for savers. So if you're somebody who your employer does not facilitate Illinois Secure Choice, but you would like to participate in the program, you absolutely can self-enroll separate from an employer. And then I do have some other links here. And again, I will share this out with Dr. Bashir after this, so this is all clickable. We do have a lot of resources out there in terms of webinars, and we also have a field representative from our program administrator who's out meeting with employees and employers every day, providing technical assistance, answering questions, all of those things. And in addition, we have a full-time client services line that's available Monday through Friday, 8 to 8. So that pretty much wraps up what I have, but I'm happy to take any questions. I know I covered a lot just now, so happy to take any questions that people may have.
Thank you so very much, Christine. That was just amazing information. I mean, my head is still spinning a bit because I'm very interested in finance and very interested in saving and investment vehicles. And I think that this is pretty amazing. When I reflect back on my own younger years, and I remember my first job, there was an opportunity. I worked at a hospital, and there was an opportunity to participate in retirement plan, and the employer matched. Mm-hmm. And I know that, that's kind of unheard of these days now, where employers are still matching, and maybe some still are, but so that was a question, and that got answered for me in your presentation. The other thing is, I do have one quick question, and that is, with self-enrollment, mm-hmm. They can do that at any time, and there's as long as they're enrolled with, and it has to be with a company.
So yeah, the self-enrollment feature. So I guess maybe I'll give some context too. So our program launched in 2018, and now today in 2023, we have about 120,000 savers who have saved through the program, and they've put aside over $110 million for retirement. The vast majority of the savers in our program have come through because their employer was covered by the state law. The employer then put Illinois Secure Choice in place at the business, and then those workers were saving through payroll deduction funded by that employer. But if you are somebody who works in Illinois, but not for an employer that offers Illinois Secure Choice, for instance, you could be self-employed, right? You are your own employer in that scenario. You can still choose to come into this program and participate in it as unattached to a covered employer. You could just come in as just, again, somebody with Illinois wages that would like to save through this vehicle, and then you could just sign up directly through our website, ilsecurechoice.com. But again, to date, the vast majority of our savers have come in through that employer channel.
Okay. My next question is, must you be full-time or can part-time employees?
Part-time employees can absolutely participate. We often get the question of, so if you recall, I had mentioned that we're onboarding employers based on their employee average size. People often ask, well, what's the basis for that employee count that you're using? And the answer is, for any business owners on the line, this will be more relevant. If you're not, this will sound boring. We look at your quarterly withholding income tax returns from the previous calendar year as filed to Illinois Department of Revenue. So every quarter, Illinois employers are submitting a list of which workers they have that were paid Illinois wages and thus had Illinois withholdings. Those filings submitted by the employer is the basis of the average that we then use. And so again, in 2023, we're looking at the average from calendar year 22 to determine, if you're covered by this particular state law. And that listing is regardless of status. If you're part-time, full-time, it's whoever has Illinois wages and Illinois withholdings, they count.
Okay. Now, I don't want to take all the questions. So if anyone has any questions, please feel free to raise your hand. But I do have another quick question. We talked about the matching funds, which is no longer part of that. We talked about, can you just kind of review the criteria again?
Oh, yeah.
For participation?
Absolutely. So in terms of employees who can participate in this program, it's really just three things. Number one, do you have wages that are allocable to Illinois? So kind of, do you work in Illinois with an Illinois income tax stream? Number two, age 18 or older. Number three, you have either a social security number or an individual taxpayer identification number. So those are the only three criteria for this. And again, on the employer side, the state law is covering employers that have been in business for at least 2 years, had at least 5 Illinois employees in the previous calendar year, and that aren't already sponsoring their own qualified retirement plan. Again, if you get a notice from our program, and we're going to start those off in late July, if you get a notice directly from our program saying, oh, you're covered by the Illinois Secure Choice Savings Program Act, please take action. Be aware that one of the actions is to report an exemption because you already have your own plan. It's impossible for us to connect every employer that has a qualified plan in place, or you might have started very recently, or you may be starting in the next month or two, or what have you. You would then just come online, report that exemption request. Could do it also through our phone line as well.
Okay, so I have a couple questions that's come in. The first question, are there any tax benefits to business owners?
So there are no tax benefits to this because it's essentially a payroll deduction IRA. So, and I also want to speak to this, and I kind of alluded to this earlier when I said, the impetus behind the state law is that there isn't enough access to workplace retirement as it stands today, right? For all the reasons we talked about before, it's hard sometimes to be able to sponsor your own plan and get that going and support it administratively, financially, the whole thing. And so thus Illinois Secure Choice was kind of a way an easier way maybe for employers that were in those positions to put something in place that was still doable, still feasible. But I strongly support that. Really, as a business owner, as even just thinking about this as a consumer, you want to make an informed decision, right? You want to understand what options are out there, and you really want to understand, looking back at yourself, what are my objectives? What is my capability? What can I take on? What do I want to take on, right? And we have employers for whom, they think about this kind of idea of retirement at work, and they say, I really want to do a 401k. right? Like I want my employees to be able to contribute more than the $6,500. I would like to do an employer match, right? There are reasons why they want to do this. And we really encourage business owners to talk to a financial advisor and say, really understand what options are out there. So for instance, in Secure 2.0, Congress put out some additional tax benefits, for instance, tax credits for business owners to start their own plans or to offer an employer match for contributions that their employees are putting in. And so I think those are the kinds of things that you want to understand as a business owner. What is the landscape? What are the opportunities that are out there? What fits me where I am today? And, we have employers that go either direction on this. Either they reported an exemption a couple years back, but they've now discontinued that plan and they want to do Illinois Secure Choice. We have employers that start with Illinois Secure Choice and then say, oh, I really am feeling comfortable with all of this and I work capacity now or what have you. I'd really like to do my own 401k. We see movement in both of those directions. So I always encourage people to really look and say, what are those options out there? What is my best decision with this information that I have about what's out there and what I want as a business owner and what meets my needs?
Okay, so in other words, there really aren't any tax implications for the employer.
That's correct. Yes.
Yeah. And can you talk about the biggest challenges in getting the enrollment?
Yeah.
And how addressing that?
Right. Absolutely. So I think, obviously, program awareness is kind of one of our biggest opportunities in terms of making sure that any employees whose employer is going to be offering this, that they understand what this program is and they understand what it can be for them. And it is not mandatory. It's something that only, if they want to do it, they can do it. If they say, hey, 5%, I can't see room for that. If you want to move to 2%, putting something away, if you can, is going to be better than not putting something away. And I know we have a lot of younger people who, we hear this all the time from business owners. These young people aren't thinking about retirement by and large. They think, oh, that's so remote. That's so far away. Why now? But we also know the power of compound interest, and putting that bit away earlier on gives it more time for compound interest to make that more and more over time. So I think certainly one of the challenges is just sort of understanding of the program and what is this, and not thinking automatically, I'm not in a position to do that. Right. It's just letting people understand that if you want to put 1% away, that's still meaningful, that and maybe that number will grow as your job changes, as your wages change or what have you into the future. But being able to put that money away to kind of pay yourself first, if you will, going with that adage, keeping in mind that your future self is on the other end of that, so that's always been something that's a little bit hard for us to maybe get across all the time. But, I think in general, with any type of savings program, if it's retirement or college savings or other, a lot of it is just how much strain a lot of families are under, a lot of workers are under right now. We have high inflation, obviously. There are lots of situations where your immediate needs need to come first. You may have debt that you're carrying from something else that's a priority too. So, at any moment in time, we understand that there may be other things in someone's life that really crowd out the ability to save for the future. But we want to make sure that doorway is there, right? Because we have so many people, so many industries, so many smaller businesses where there's just never been a doorway to save at work. And so we want to make sure that access is there. Whether or not somebody's able to walk through that door is really up to them in their own personal situation. So we know that there are other pressures that people feel from kind of other macro factors. And that's just something that's an economic challenge that we're seeing in lots of, different realms.
I mean, you really put it so eloquently. I appreciate that because when you spoke about during your presentation, restaurant workers, salon workers, and how in the past, many of these people never had any opportunity to try to prepare for retirement. So they were going to be depending solely on Social Security. And as you talked about, we know that Social Security is, at risk, essentially. So I still have a few more questions. I'm excited about that. Let me see. Is there any age limit for the enrollment?
So there's no upper limit. You can be whatever age on the top end, but on the low end, you have to be at least age 18, and that's just an IRS requirement. So we do have some businesses, especially kind of more seasonal ones, like an ice cream type place where they say, oh, we employ a lot of high school students at that time. That employer would obviously not upload anybody who is under the age of 18. It's really just for those workers 18 and older, but there's no upper limit on the age part of that.
Okay, we have another couple questions.
Mhm.
Will you please say how you're getting the word out to employers and employees about the
Mhm.
program? And that
Yeah.
you mentioned notices. Will all employees or employers in the private sector receive these notices?
Yeah, so that's a great question. So our main channel of communication to eligible employers in any given calendar year is direct mail, specifically mail to the address that's on file with Illinois Department of Revenue for that business. So if you are a business owner on this line, think about logging into your My Tax Illinois account to just make sure that the address that's on file is a current mailing address. Again, we will supplement with email communications, but again, that email information is all coming from what the employer entered in their portal for Illinois Department of Revenue. We are also doing outreach to stakeholder groups. So reaching out to local chambers. Small Business Majority has been a great partner in all of this for all of these years that we've been around in Illinois. Public libraries that have business librarians. We're trying to do some outreach to Rotary clubs. We're really trying to supplement our direct communications with other places that a business owner may turn to is already connected for information and resources to really supplement. Okay, that letter that you got is a real letter. It is not spam. This is a real state law. There's a real retirement crisis. There are really great things that can happen when employees can start to save for their own retirement. So again, direct mail is a given. Email is supplemental, and if we have valid email addresses from Department of Revenue, and then we try to supplement with having other groups that are involved sometimes in that business kind of stratosphere, kind of ecosystem, also supplementing with that message as well.
Okay, another question here. If I am a small company now and then go to a larger one, that offers a 403B or 401k, what happens to the participant's enrollment?
Sure. So in that case, the participant who, again, I think the key thing here is because this is an individual retirement account, the owner of that account, the employee, the worker, they're always in control of that account. That money is always under their control. So if they want to keep the account as it is today, they can choose to do that and either leave it at the balance that it was when they were with the employer, or if they want to set up a self-funding mechanism, if you want to set up a recurring bank draft, for instance, say I want to put away a certain amount every paycheck or what have you, that's still an option. You can choose to roll those funds over into your new plan. I would say that you want to talk with your tax person, though, because there may be some consequences of rolling after-tax funds into something that's a pre-tax vehicle, which some of these 401ks and 403bs are pre-tax. But it is something where you have the flexibility to do what you want with that particular account and those funds. Those funds are always yours.
Yeah, so that's the portability of it.
Mm-hmm.
Okay, got another couple questions here. Also, just to clarify one of the previous questions, did you say that folks can self-enroll even if their business hasn't signed up for the program? And does this include employees that work for small businesses with less than 5 people?
Right. Great question. So yeah, self-enrollment is available to anybody who has Illinois wages. Now, if your employer, is going to be contacted by our program this year because they're in that position of having had 5 to 15 Illinois employees last year, you can wait for your employer to start it up through the business, and you don't have to jump the gun and sort of self-enroll advance of your employer then setting up the program. But if you were working for somebody that is not facilitating the program, if that's because they offer something else already and maybe you are part of that or not part of that, or they have fewer than 5 Illinois employees, then self-enrollment would be a pathway for you to come into the program separate from that employer that you may be attached to at this moment.
Yeah, and this also gives, individuals the opportunity to have other streams of income, if you will, come retirement age. So,
right. And I guess, to that point, and maybe we talked about this, maybe we haven't, but, back in the day, there was always this concept of the 3-legged stool of retirement, which was, you had your pension, you had your personal savings, you had Social Security. And where we've seen the biggest shift is you don't really see company pensions anymore. You see it in the government space, but really in the private sector, it's pretty rare now to see a pension, right? And so now the shift has been when you move into that space of a 401k, a 403b, the onus becomes on the employee to put that money aside and to manage the payouts once they reach retirement versus having this guaranteed sort of monthly income once you reach retirement that you get with a pension. And so really there's been a huge shift to The employee now needs to take it upon themselves to make sure that their personal savings is sufficient to help supplement basically Social Security, because in lieu of a pension, you've got now two of the three legs. And we know Social Security has been inadequate so far and may be jeopardized, for the future, depending on kind of the status of all of that. So there's really just been more of a shift to kind of personal savings as a way to fund your retirement. And really, you can look at it, like you were saying, Dr. Bashir, as really multiple streams. You can have multiple IRAs. You can have a 401k and an IRA, or multiple. There are different ways that you can address kind of those streams once you reach retirement. It isn't solely just one thing. It can be many things.
Yeah. And you can have a 401k and a 401b if they were from different positions.
Correct. Yeah. Right. Absolutely.
Yeah. One thing you just said, and I don't want to say, please say it again, but please say it again. Please talk more about how, we have so many young people, our millennials, who, they don't have that spirit. They want to stay on a job. And, even if the job were to offer pension, let's say it's a state job, right? Or a job where they are offered a pension. Many of them have no desire to stay the long haul and to get the maximum pension, right? 2 or 3 years, you and I, when we talked previously, just privately, we talked about, if you run across an employee who actually worked on a job 10 years, you're like, whoa.
Right. This is suddenly exceptional, right? Versus it being the norm, a couple generations ago. Yeah. I think, and for young people, I think it can sometimes be very hard to say, wait a minute, I'm putting aside a certain percent that's going to be not available to me for my future, which is, honestly, if you think about it, you might enter the workforce at 22, 23, you might be working until you're 65. I mean, that's decades away, right? But I think the important thing here is, if you can, think about using that channel of retirement savings to really pay that future self. When you put this money away, it gives more time for compound interest to kind of do its job. But I understand too that it can be hard. And like I said before, I think every individual has to really look at their situation, the inflow, the outflow, what is doable, what makes sense, what's strategic. And there are going to be some younger folks who may be, coming in with a lot of student loan debt. Let's be very honest about kind of the reality that a lot of our students are coming out of college with. And really you have to really look at it holistically and say, okay, where does my next dollar need to go that makes the most sense? And retirement may make sense. It may not. Priority wise, it may not. And it does depend on your situation. But I think for those younger folks, you have to remember, pay yourself first is a real thing. It's a real tenet for a reason. Your future self you don't want to look back with regret and say, my younger self really shortchanged me, and now I'm feeling the brunt of it here now in my, what should be my golden years, but I'm struggling.
Yeah. I actually, prior to this meeting, was having a conversation with a colleague of mine who worked for the city of Chicago. And when she retired, she, pulled her pension. And she says that she's doing okay, but generally speaking, that's not the best idea, because you're kind of taking away that other stream of income. You're not going to have that guaranteed amount, that you'll keep monthly. And, and she is certainly no youngster, and that was her choice,
Yeah. And it is, I don't want to discourage people, but planning for the future is a complex calculation, right? You have to think about, honestly, one of the biggest fears right now for retirees is outliving their savings. Yeah. That is a very real concern, right? Longevity. I mean, people on average are tending to live longer, and then you have to think about, okay, that's more years that I'm in retirement. That's more years that I'm gonna have to manage. How do I, now that I'm not working, how am I making it months and months and months, So there are a lot of considerations. I certainly encourage anybody who has access to a financial advisor to start having those conversations, because you don't want to be late looking back thinking I should have done it differently, but you want to be more proactive and forward looking and saying, I'm building for the future. I've got a plan, not understanding that things can come into your life that kind of knock those things off, but being, aware of those things and being as prepared as you can be. But it's a complex calculation. It really is, when you think about long-term care and you think about all those things, there's a lot, that we have to think about. And I think it's, again, just sort of opening your eyes that retirement is going to be something you're going to need. And what can you start thinking about or doing today?
Oh, yeah. And I think that, when young people, they, again, like you said, they're thinking decades away. I need money now,
Right.
But every dime counts. If you're able
if
to
you're
make,
able.
right, to make small, you know, contributions to programs like this, or your 401k or 403b or whatever your program is, they really do add up. It
They
really
do, they
does.
do. Yeah, and I want to say again, kind of to what I said earlier about, you know, business owner thinking about all their options and what makes the most sense, or as a consumer, you know, even in this sort of context of self-enrollment, we're not the only individual retirement account option out there. You know, look around and see what else is out there. There may be something, a lot of these or sort of online offerings offer very low rates. You know, some of it is more self-directed. Maybe you want something that you're not as self-directed. You want more to be kind of like the options are laid out for you. Look at all the options that are available to you. Just understand that Illinois Secure Choice is one of them, but one of many. You know, so you want to pick what's a good fit for you at this moment.
So another question is with regard to, you know, when you're contacting and reaching out to other communities, is the literature in different languages to account for the diversity of our communities?
Yeah, so we do have a lot of our saver materials in other languages, namely Spanish, Polish, and Chinese. Our client services line offers more languages than that for those phone interactions. So we definitely have multilingual support through that phone line. And we do have activation. And you'll see we get a breakdown every quarter of what other languages were utilized by the vendor. And you see there is some good diversity in there. So we are trying to account for different linguistic needs as well.
Okay, I have one more question for you. At what point do young people going into the workforce learn about options for retirement? So that I know that's a general question. And also, this kind of thing isn't taught in school. Are employers obligated to talk to employees about retirement?
Yeah, that's a great question, right? Because it digs down into kind of like what we, I guess, used to call consumer economics, or kind of that idea that you come, like, part of what you learn through the general school system is kind of some sense of finances, you know, and I think that there's always going to be gaps. I don't want to say they're always going to be, there are a lot of gaps right now where a lot of young people don't understand that concept. Like, I know when I was working in an organization that did free tax and income tax preparation, most people come out of school, be that high school or college, and they're not really sure what happens with taxes, even though it's something that as you work, that is going to be an annual requirement for you. So I know, like, for instance, our office, the Illinois State Treasurer's Office, we have a couple of different financial education initiatives. One is Money Minded Illinois, which is a curriculum for K through 12. So really trying to encourage the schools to kind of put it in as part of their curriculum. But we get that there are a lot of pressures on how much you have to get in that K through 12. There's a lot of knowledge that needs to be covered, but we really are advocating that financial basics should be part of that, because how do you function, right, without having a level of awareness of what you need to do with your finances? In terms of employers, you know, is it really incumbent upon them to provide some of this education? I mean, in a strict sense, no, it's not required, but are you seeing more of that offering these days because employers are looking for it? Employees, you know, I think obviously with COVID, a lot of the position has changed. The way people want to work, what they're expecting of their employer has really changed. And I think it's put more light on the fact that a lot of employees want more financial education, or want the ability to kind of do more with their finances through their employer. So I think you're seeing more of a push for that from the employee side. Employers, again, tight labor market, they're looking to attract people. They're looking to kind of sweeten what's there, you know, so you do see a lot of more of an increase in sort of that financial education component that employers will offer. But in terms of, you know, there are absolutely gaps, you know, with a lot of folks coming out of school, whether that be high school or college, where they're not really sure what to do financially.
And I think that unfortunately, that affects more people than we really realize. I'm sure many of us can think about, you know, our own situations, our children, our other family members, and our siblings, and folks really just aren't prepared.
Right.
They just really aren't prepared. And, you know, you would think that once you get to retirement age, that, oh, Social Security is going to be there, Medicare is going to be there. Well, you know, yeah, it may be there, but it's going to be quite fragile, you know.
Right, or it's not going to be enough. You know, it is a stream, it's not a sufficient stream. And in Social Security, they've said this before about themselves, it was never meant to be the sole source of income in retirement. It was meant to supplement these other things, like a pension, your personal savings. And so, you know, it was never meant to try and be the lion's share, but unfortunately, a lot of people are relying on it that way.
Yeah.
And it's just not enough.
Yeah. I have another question. Are nonprofits eligible for the program?
Yes, this is any private, so any non-governmental business, so private sector, nonprofit is kind of third sector, I guess, if you will. Those are all, there's nothing about being a nonprofit that would make you ineligible for this.
Okay. Okay, great. Any other questions? Any hands out there? Those were questions that came in via the chat. Any hands out there before we wrap it up? We're down to the last couple minutes. Okay. All right. I think we've covered everything. Again, this really resonates with me, because of my own family situation, with two daughters, two millennials who are kind of like, who wants to work on a job until they're for 40 years and then die? That's got I don't want to work in a cubicle for 40 years and die, so it's like they just don't see that there really is life after retirement.
Right. And really hopefully a very long stretch, again, with kind of the increase in life expectancy, you want to be able to enjoy more of those years. And I know like just kind of where you are, your station in life, what wages are today, you might be working beyond 65. That's, certainly the reality for some folks, but you definitely want to have enough to live your real life at that point, and we all know that we probably have to cut back in retirement in terms of some of the choices we may make lifestyle wise, because you don't have that stream of income, you're more fixed income, but you want to have enough, your 68-year-old self prepare that person, that's you too in the future. Don't forget about that person for your 24-year-old self,
Exactly. And making sure that 68 or 70-year-old self is living well.
Right. To the extent that you can be prepared and build that nest egg, please do it. Your future self wants you to do it.
Yes. Yes, very much. I've gotten one person says, that she really like to say thank you. A couple people, thank you for this very, very, very informative presentation. As I said, and we talked offline, that I think that this is critically important. When we look at the economics of all of our situation, we look at the economics of that's happening right now. We hear about it every day in the news, inflation, the cost of everything is going up. And we just want, you just have to really, really be prepared. And no amount is too small. To pay yourself first.
Right. Exactly. And I just want to thank you again for this great opportunity to connect. And certainly for anybody who's on the line, if there are other groups that you think, hey, could you do a webinar, or could you come on site and do something, feel free to reach out to me. I'll put my contact information out there too, so you'll have it with a copy of today's presentation. But we're always looking to form those partnerships, because the more who know, it's just better, all the way around. So certainly feel free to reach out to me if there are folks in your orbit that you think, oh, this might be a good thing to link up on.
Yes, I definitely will.
Dr. Bashir.
Yes.
Before you get away, this is Rod. Christine, how are you?
I'm good. How are you, Rod?
Thanks. I just want to thank you for being so generous with your time and providing this valuable information to those participants on the line. Can't say enough for generosity. So thank you again.
Oh, no, truly my pleasure. And thank you so much for this opportunity. Always appreciate being able to connect and hear people's questions and just keep that dialogue going. So thank you for the opportunity.
Yes. We really appreciate it. It's just a wealth of knowledge, and so critically important right now, especially right now, when you go in the grocery store and everything is going up like crazy, and, you project 20, 30 years from now, what is a gallon of milk going to cost, right? And you got to be able to afford it. So you got to work on.
Right.
Yes. So yes, thank you so very much.
Of course.
We appreciate it. And I look forward to this going out on YouTube. And we will also pass along your PowerPoint and your information to other groups that are part of our association.
Perfect. Well, thank you so much. I really appreciate it.
Thank you. Wholeheartedly. Thank you. All right. Well, thanks everyone for tuning in. we're going to sign off. We appreciate everybody's your time and taking this time on a Sunday afternoon. So thank you all. We're just going to end with a quick dua with God's name, most gracious, most merciful. Praise be to God. Praying that everyone stays healthy and well. Amen.